day. We are about to do that right now. 3 at 3 presented by me, Jon Najarian. I've been a trader for over 38 years, and by trader, I mean Trader. I have traded, of course, through the crash of 1987, of 89, through remember YTK, year 2000, when we were going to turn over and they said, hey, none of the computers will work. Traded through all that. Traded through the crash of the financial crisis, 2008 through 9.5. All of that stuff. And I must say, the best opportunities I have ever seen are right now. Right now, record-breaking year, knock on wood. Let's get started with 3 at 3. Disclaimer. Well, the disclaimer is that what I'm about to present is for educational and informational purposes only. Thank you. Getting a fill here. There we go. Bang. Also, if you'd like to learn more about what we do, you can go to marketrebellion.com/get started. At that site, you will see how you could truly get started. If you're already trading stock, congratulations. If you'd like to learn more about it and maybe how professional traders do it, you could go to marketrebellion.com/get started. Likewise, beginning, intermediate, advanced options, cryptocurrencies, futures, you can learn all that at marketrebellion.com/get started. So let's get started with the Dow higher by 340 points. The S&P, which has made a very dramatic turn because the S&P was exceedingly negative this morning. Early on, the low I show for the day, let's see, where's our daily range? 31.28. Right now we're at 31.72. So nice comeback. Let's see where we finish the day. That's always important, as you know. The Dow Jones Industrials, as I said, up 340. S&P 500 up 17. NASDAQ is down 13 points. This one was significantly lower earlier today. We were down over a full percent in the NASDAQ. For instance, we were down around 10,183. We are now at 10,372. So pretty big bounce off that, you might even say V shape. Let's take a look at what we have for unusual activity. Shall we? Hainesbrand, HBI. Hainesbrand, HBI activity today, extremely active in the options contracts. 6,500 of these August 13 calls. So they're out a full month into the future. How do I know that? Because they're August calls. Regular August expiration. That'll be the third week in August. We are in the third week of July right now, so I'm saying a month into the future. And Credit Suisse took these guys to outperform from neutral today, set a price target of 15 on Hainesbrand. They think HBI, leading share in low volatility basic apparel categories, supports better visibility. I'm just saying the best visibility that I'm seeing right now is in these August 13 calls where they bought them from 70 cents up to $1. So Hainesbrand right now, when we saw that, which was at 10:13 this morning, HBI was trading for $12.06. It is now $12.55. It is up 9.5%. Bang! I am in these calls for 80 cents and 85 cents. I intend on holding these about a month. Keep in mind that these are just out of the money. Now, some of you could say, well, what if I wanted to buy the 12s instead? I want to get more at the money rather than out of the money. Okay, those 12 calls right now, let's see, for August expiration, because these don't have weeklies. They're not that active. The regular August 21st expiration, the longest expiration you can get, by the way, is 21 days into August. And those calls are trading for $1.40 on the bid side to $1.50. Now, so for instance, just to put it out there, for those of you who want something that feels more like a stock investment rather than let me invest after this 9% rally and bet on another 9% rally. The 12 calls trading for $1.45, let's say. I'll split the difference, go right in the middle, $1.45, and you could sell the 14 calls. That would be a $2 spread. The difference between the $12 strike down here and the $14 strike. You have the right to take it from someone at 12. If you sell these 14s, they have the right to take it from you at 14, which would result in $2 if that happened. So that spread, if you did it for 65 cents and $1.40, you're in there for a pretty cheap price. You know what I mean? I mean, basically, so, you know, you don't quite get a triple out of it, but you get a really strong double and then some if the stock gets to 14 or higher by August expiration. On the other hand, as I told you, I have these, the 13 calls. I bought those because that's where the heaviest action was, and it didn't seem too far out of the money for me. And now 11,600 of these have changed hands so far today, double the number you see on your screen. And right now they are 95-cent bid offered at $1.05. So let's say you could still get in at about $1 right here. So that would mean that my calls that I bought for 80 and 85, I'm up, let's call it 15 cents, right in that range, 15, 20 cents. I will be looking for a double here. If I get that double, I will pull half the money off the table. If, on the other hand, these fall from 80 cents to 40, I will exit the trade and take my lumps, because that's what I do. Manage my risk to the downside, manage my profits to the upside. Bang! That's the chart today as we move higher, and I appreciate all the nice comments that you guys have been sending me. Let's get to the second of our 3 at 3. That second trade right after this with Pete and I. We've been doing this for over 30 years. I've been doing it 38 years. Pete's been doing it now for, I guess, 33 years. 32 years, sorry. But we have been doing this. We've taught people how to trade. We've put up our trades online so people can see all of the unusual activity we're tracking daily, weekly, whatever you want. We've got a product for you. Ford, take a look at this one, folks. Ford, symbol F like Frank. And I love all the questions that I get frequently about, for instance, Ford and, well, why is Tesla trading for so many times Ford? I mean, this is a $25 billion market cap company. Yeah, and they have a dealer network they have to pay. Those dealers buy the stocks. Ford finances it. They probably make more money on financing than they make on selling the cars. And they have to pay pensions. Again, I'm not against people that live up to their obligations. Ford made an obligation, as did virtually all the other car makers, to pay their workers this pension in exchange for some of the givebacks on the labor side. So I'm not demonizing labor, folks. I'm just pointing out there are a lot more costs on Ford than there are on Tesla. That doesn't mean that Tesla is justified at the price it's at, which, by the way, TSLA, Tesla is trading at $14.96 right now, which is a market cap of $277 billion. And you might recall, by the way, that we did that 1,400, 1,700 spread in Tesla and sold some downside puts to help pay for it. That was the spread that we talked about that was done 3,000 times last week. They've already made some nice money. They're feasting on that trade so far. And yesterday, when it was up 16% and nearly trading through 1,800, didn't go through it, but nearly up to 1,800, well, you can imagine the profits that were there for the taking there. All right, so let's get to Ford, though. Symbol F like Frank. Ford, the 31st of July. That is the end of July expiration. So this Friday is the 17th. The following Friday is the 24th. The last Friday, the last day in July is the 31st. So these are 2 weeks out as far as these calls. So you have 2 full weeks, a little bit, and they paid 57 cents to 63 cents for these calls. I am in this trade as well. It is right at the same price, $6.26 right now. When I took this picture, it was $6.30. So you see us just kind of fluttering around right around that $6.30 area. These calls, let me see, where are they right now? I'll give you a reading on that right now. They do have weeklies in here, so you have to be careful when you're entering your orders. The July 31st expiration 6 calls are 62-cent bid, offered at 63 cents. They are up 43 cents on the day. That's from last night's close. Bang. Let's get to our third and final of the 3 at 3 right now. BILI, B-I-L-I, folks. So B-I-L-I, as you guys know, I'm not unique. Pete also trades very actively, but we don't just talk about stocks. We trade stocks and options. So some people just talk about them. Some people, it's like, oh, okay, I'm an analyst. That's perfectly fine, and they don't want you to trade in many cases. We are not analysts. We are traders. So BILI, B-I-L-I, this one is trading for, when we saw this, $43.78. They were buying the 45 calls, the just out of the money 45 calls in here. What does BILI do? Well, it's Chinese stock, online entertainment in the People's Republic of China. They bought 1.4 million share equivalent in here. How do I know that? Because 14,000, every option is for 100 shares of stock. So that's 14,000 translated into stock equivalent, 1.4 million shares of stock. And that's not a cheap trade. They paid $339 to $344. So that's $339 per option to $344 per option. Just getting another fill here. So for instance, let's say that you bought at first of all, let me tell you where they're offered right now. So AUG 45 calls. BILI does also not have weeklies. So there's only the August 45 calls. As far as there's no AUG 7s or 14s, or there's only these, the 21 expiration, 21st of August. And these are trading for $3.45 right now. They're $3.40 bid, offered at $3.45. So let's say $345 a piece. And so far today, they've traded 11,545 of these. That is $3.9 million worth of options. Bang, bang, bang. Bought like that. I want to follow people that are doing those kind of trades, folks. So if you're one of those people buying a whole bunch of options, you're likely to show up on my radar for our heat seeker. So I am in these, but because they are big, expensive options, in full disclosure to you, I got in here and I sold options against it. So I paid $3.40 for these, literally right where it is right now, $3.40. And if you look at the strike above it, the 50s, same expiration, of course, August 45. August expiration. These traded from $1.45 up to $2. So right now they're trading for $1.95. So again, let's take that $1.95 and let's take that from $3.40. Your net here would be $1.45. That would be if you bought this spread for $1.45. And what's your upside potential? Well, the differential between 45 and 50, which is $5. So you paid $1.45 for something that could go to $5. So that means, of course, you could have a double, because that would be $2.90. You could have a triple in here. So I like our odds. And I like that we've addressed theta, time decay, by doing a spread, 45s versus 50s in here. And I think we've moved the odds into our favor, just like when somebody counts cards. You're moving odds into your favor because you're saying, you know what? Stock could explode. It could do what Maxim did and go to, $10, goes up $10. Great. Well, this spread still only goes to 5. We will not participate if it breaks through 50 to the upside. But I'm comfortable with that. I'm comfortable with cutting my time decay, theta, and I like that vega, volatility, is also addressed by doing that spread. So that's what I did. You want to learn more about that, folks? There's, you see Billy today, B-I-L-I. You want to learn more about what we do, go to marketrebellion.com/UOA. That is marketrebellion.com/UOA for unusual option activity. We do it every day throughout the year. And if you'd like to learn more about it, see the pricing for multiple trades per day, one trade per day, one trade per week, go to marketrebellion.com/UOA. Thank you, folks. Always a pleasure. I hope you enjoyed the presentation today and learned a little something maybe about spreads. And I'll see you tomorrow. I'll be on the halftime report Thursday and Friday, not tomorrow.